So, there has been a lot of chatter this past year about the US creating a sovereign wealth fund. And on the surface, I would say it sounds pretty amazing. A sustainable way to invest in cutting edge tech, green energy, infrastructure, and setting aside money for future generations. And if it grows big enough, we could even lower taxes and debt and maybe even give everyone money instead. But
Give
there,
everyone money.
I know, there has to be a catch, right? If these
Yeah,
funds
this
are
is
obviously so great, then why hasn't us, the richest country in the world, already made one? So let's find out today, why do sovereign wealth funds exist? What are examples of good and bad sovereign wealth funds? And why don't we have one?
also you gotta explain to me what a sovereign wealth fund is.
Yeah, that's what it says right here. What is a sovereign wealth fund?
Oh, I'm illiterate.
No, yeah, we can cut that out. Don't worry.
Cut it out.
Okay, first things first. A sovereign wealth fund is basically a giant pool of money owned by a country instead of a person. Think of it like a rainy day fund or even a college savings account for the entire nation, except instead of just sitting in a savings account, it's invested in stocks, bonds, real estate, you name it, even companies. Okay, so you know my friend Nick has a TikTok where he rages at the Mets and the Rangers. I did make a cameo on the most recent video, just saying go watch it. Let's imagine he goes viral, mega viral, and somehow makes 100K off one video. Should he spend it all on diamond studded Jackson Dart jerseys or a Mets themed Lambo? Obviously not. He should save some money in case this is a one time thing, right? So countries do the same thing. Usually it starts when a country suddenly earns a ton of money from oil or commodities. Um, they know that revenue won't last forever. And so instead of blowing it all, they invest some into a sovereign wealth fund. And honestly, we'll see this might be possibly one of the smartest moves a country can make. So, why do countries do this? Let me break it down into four big reasons. And trust me, these are actually pretty cool. So, the first one is insurance for bad times. It's like your emergency It's like your emergency fund. It's a built-in safety net that could stop people from freaking out if the economy crashes. And if you're dependent on oil and oil price crashes, the government can help tap the fund instead of raising taxes or going into massive debt. Secondly, it is diversification. Imagine your entire economy revolves around something like oil or diamonds or some natural commodity. That's kind of risky. By investing some of that oil revenue into other sectors, like we said, clean energy, healthcare, tech, you kind of build a safety net for when oil demand drops or you suddenly run out of reserves to mine. Um, an important note is this spending that you're going to be doing in a sovereign wealth fund is not the same as a day-to-day government expense or government spending. So it's like completely different. Building roads, firing a missile, that's an expense. You're not really expecting to earn any money off of that. But a sovereign wealth fund is meant to earn profits. It's kind of like buying part of the grocery store instead of just shopping there. So, third reason why you would do it is to reduce debt and inflation. So, if your investments can earn 5 to 6% a year, which is usually the goal of a sovereign wealth fund, that's usually better than inflation. And you kind of avoid wasting your money on constantly paying interest from constantly borrowing. As an FYI, America now spends more money on our interest expense than we do the entire military. So a sovereign wealth fund could be a way to kind of avoid that. And the last one, Well, this one is kind of fun. It is power. So a big sovereign wealth fund isn't just money, it's soft power. Let's play guess which country owns what. So we'll start off at the top. This this country used its fund to bankroll the World Cup in 2022. They invested over $200 billion in infrastructure to do so, and they also own Paris Saint-Germain, part of the group that owns the Washington Wizards, 17% of the Volkswagen Group, which owns Lamborghini, Bentley, Porsche, Audi, and 20% of Heathrow Airport. What do you think?
You do that? You can own an airport?
Yeah. Don't ask me how,
Wow.
but they do it. 20%.
Okay. Can I get on that?
Uh, you might need to get some more money. Okay. So this country is Qatar. Next one, this fund almost owns almost 4% of BlackRock, which, as we know, is a very well liked company. That is Singapore. And then we've got a fund who owns over 3% of Uber, 10% of EA, and 6.5% of the company that owns Grand Theft Auto. And that is Saudi Arabia. And then we've got the big kahuna. This one, this fund is so big that it owns 1.5% of every single public company share in the world. So
You say 1%?
1.5% of all publicly listed shares is owned by the Sovereign Wealth Fund of Norway. Not even kidding. So that's not just money. That's like serious leverage over global companies and entire countries. Does the US already have something like this? Kind of. Let's head up north to Alaska. So back in 1969, Alaska leased their land to oil companies for $900 million. So considering that their entire state budget at the time was 115 million, this was massive. But within about 3 years, this went to zero. I mean, they spent it on important things like schools, roads, infrastructure, but it disappeared fast because it all went to government spending. It's like buying organic groceries this time instead of buying the grocery store. So in 1976, they realized we need to do something about it, and they create the Alaska Permanent Fund. This fund will basically funnel at least 25% of all oil royalties and lease payments that the state gets, and they'll save it for future generations. So the good part is this isn't controlled completely by one person like the governor, but instead is kind of overseen by a 6-person board with staggered terms and fiduciary responsibilities. So they have like legal duties to uphold the fund's goals. And today, that fund pays out annual dividends to residents. So in 1982, this is a picture of the first dividend received by an Alaskan resident in 1982. The first check was $1,000. And since then, it has paid $24.4 billion in dividends alone. And now,
I
yeah, is
go
that's
figure.
no, that's insane, right? Like
Yeah,
24.
I hear Andrew Yang screaming from the clouds right now. This sounds like universal basic income.
Yeah, this might possibly be the maybe not the only, but the biggest example of universal basic income in practice because each person has received thousands of dollars every year for doing nothing.
Wow. And do they just give this out to any resident? Like, can I move to Alaska and just start, making money?
Uh, from what I understand, I think like 80% or 85% of the state gets some, like you have to apply for it, but 80 to 85%. Oh, yeah, no, it's right here on the side. So, of the state population, like a huge percentage of the state will get a couple $1,000 every year.
Wow.
Yeah, and so the whole goal of this was to have funds just in case these oil reserves ran out, and that is kind of exactly what happened about 10 years ago. So oil prices kind of dropped a lot, and their oil revenues were just kind of drying up, and so the government passed a rule that would require the fund to withdraw a certain amount each year to help pay for the state's budget. And right now, this fund alone, just off of this forced withdrawal, pays 20% of the entire state's annual budget. So this is like crazy. The permanent fund is now like it has grown from $700,000 in 1977 to $84 billion today. That is like $115,000 per Alaskan resident. So yeah, this a U.S. state has already made this work so well that they don't even have income taxes and they actually pay residents each year. But other countries with even more oil, let's just say they didn't fare as well. That brings us to Venezuela. Venezuela sits on the largest oil reserves in the world. So they should have been the next Norway, right? But instead, as we'll find out, their GDP has collapsed by over 75% in a decade. And for reference, that is twice as bad as the Great Depression in the US. So yeah, so as we'll see, largest oil reserves. Venezuela had and still has a sovereign wealth fund. It's called the National Development Fund. But instead of funding productive assets, the fund, well, we don't exactly know what the fund did. There were no requirements to disclose projects or progress or returns, and approvals were made by a board of director made up of the president at the time, Chavez, his close allies. So money was kind of spent for political purposes or for the military and not on productive assets. So instead of future proofing and diversifying the country out of oil, the fund was plagued with corruption, half finished projects, and handouts that just depleted the fund. So they had a sovereign wealth fund, but it became a slush fund for political projects, the military, handouts. There was no transparency, no independent oversight, corruption everywhere. And there's obviously a lot more to their decline, but there's almost $30 billion. This is about the amount of money, more than the amount of money that's been paid out to Alaska over their course of their fund. It's unaccounted for. This is missing money that nobody knows where it went, and we're pretty sure it went for to political favors or corruption type of deal. But it lesson learned: a sovereign wealth fund is only as good as its governance. What was I going to say? Strong institutions, independent governance, and transparency, a clear measure and marker of success. These are all necessary to prevent corruption and plundering and actually preserve this wealth for the future, or it just becomes a politician's piggy bank. So let's recap. Sovereign wealth funds are an incredible tool for statecraft. It can help diversify out of natural resource industries, protect an economy from recessions, and display your power to the rest of the world, all while allowing future generations to have a more secure future. I'd say we finally have enough background to answer, why is there no US sovereign wealth fund? We're going to go down an iceberg from simplest to most complicated. So first, with what money? We haven't had a budget surplus in decades, and we all know that the government debt is insane. So, unless this money comes from somewhere else, we'd essentially be borrowing money to invest it somewhere else. And right now, with interest rates near 5%, inflation at 3%, and the goal return for a conservative sovereign wealth fund is 6, 7%, that's really risky for very little payoff. So I know this might sound crazy, but maybe we just pay down the debt instead. Second, politics. It's no secret that American politics loves short term wins. Tax cuts, stimulus checks, flashy programs. Long term discipline, not so much. The only budget surplus we had this century under Bill Clinton was immediately followed by a huge tax cut by Bush, which erased more than the money we saved. So, sovereign wealth funds require discipline and restraint, which are not really words I would use to describe American politicians. And I mean, just imagine Congress having a $1 trillion fund and saying, don't touch it. Like, good luck. I'm not delusional enough to deny that if Trump currently has his hands on $1 trillion investment fund, he wouldn't try and buy Trump coin or something. So in 2025, the chance that this money gets mismanaged is just really high, and it would be hard to imagine a sovereign wealth fund created by Trump that would be independent enough from Congress and the executive branch. Okay, third, we've got culture. So, America, as you know, is built on individualism and a suspicion of big government. So, it's no surprise when it comes to saving money, we prefer the DIY approach, 401ks and personal investing over some kind of collectivized state version of savings. So, I mean, obviously, this is not entirely accurate because we conveniently ignore the VA, Medicare, and unemployment, but a fund that just cuts checks to everyone feels kind of un-American.
Communist. It sounds a lot like communism. What's the difference?
Well, okay, so it's very easy to mistake in sovereign wealth funds as communism, but I mean, like to be fair, both involve state ownership and control of capital and some control over businesses, and it kind of both involves pooling national resources together for hopefully the collective benefit. And if a sovereign wealth fund is run poorly, like in Venezuela, the state can kind of arbitrarily allocate money and exert control over the markets, which is kind of how many inefficient state run communist systems are. But sovereign wealth funds are like super capitalist. It leverages the profit motive to invest in global capital markets. So, like, instead of entirely abolishing private property and have complete central planning, the state is like an investor within the existing market system with only surplus wealth. But we don't like to think about all that. I mean, if to be fair, if Fox News ran a segment saying sovereign wealth funds is socialism, half the country would believe it. And meanwhile, the Pentagon literally now owns stakes in mining companies and just announced a
I was
10%.
gonna say, the government just bought a 10% stake in Intel. That
Yeah,
seems like government owned private companies,
eh,
which is very
details,
reminiscent of communist practice.
details. We don't have to worry about that. So, all of these reasons kind of seem short sighted up to this point. Like, one could reasonably suggest that America is kind of falling behind the eight ball and that without a sovereign wealth fund, we're kind of at a long term strategic disadvantage compared to China, the Gulf states that are all able to invest in these businesses and future oriented technology and punch far above their weight class in global influence. And it kind of, but there are more subconscious reasons why the US doesn't have a meaningful sovereign wealth fund. So if we go back to the core kind of principles of what makes a nation thrive, there are ways in which the sovereign wealth fund could kind of backfire and erode the very foundation it relies upon to be successful. So there's kind of an argument to be made that dividends from a fund you put no effort into will kind of dull accountability. In a world where you kind of instead receive a few grand from the government each year for doing nothing compared to paying taxes, you could probably care less about who's in charge of your government, and you don't need to work that second job. You'll probably take an extra sick day or three and not study that extra hour for the exam. I mean, why bother if you're going to get paid anyway? So instead of becoming active and engaged civic participants, you kind of become almost like a lazy, spoiled rich kid, but instead it's a lazy, spoiled entire country. And so you become a shareholder kind of coasting off of your country's wealth.
Mm.
And now we come to the real reason why the United States could care less about a sovereign wealth fund: their status as the global reserve currency. World reserve currencies can and probably should have multiple videos all by itself. So I'm not going to go too crazy here. But basically, if I'm a government or an institution, I want a safe and liquid asset to park my money. And I also kind of want a standardized, stable, and liquid contracts to trade oil or stocks or food. So the dollar and the US treasuries have kind of fit that role for decades now. It's the largest pool of risk free assets that has over $500 billion worth traded daily. It is basically a sink for the entire world to put their capital in just for convenience purposes. And the more reserves held in dollars, the more demand for treasuries, which is our debt, because you need dollars to buy those. And it makes the market that much more easily tradable. So this makes it easy for a government to borrow money because everyone wants it. And so that makes it not only easy, but cheap to borrow more and more money. So holding dollars is attractive because everyone else holds dollars. Issuing dollars is attractive because there is a deep market for our debt. And trading in dollars is attractive because everyone accepts dollars. This is a very sticky, self reinforcing behavior because it would be a huge, massive undertaking to create an entirely equally integrated, credible, and stable alternative. Well,
But if
okay.
it does, then that kind of collapses the U.S.'s strategic advantage.
You mean that if we create a sovereign wealth fund?
I'm saying if we suddenly stop becoming the world reserve currency, everything kind of blows up. At least that's what it sounds like you're saying.
Yeah, I mean, if you think about it, if nobody needs dollars anymore, then all of a sudden we're just going to be a country with a lot of debt and a lot of problems. So that's part of the reason why you should create a sovereign wealth fund, right? Because it'll give you some type of kind of wealth to tap into in case your country actually goes into trouble. And the US kind of isn't even bothering doing that right now because it's just so good at getting everyone else's money. But kind of why is this all incompatible with a sovereign wealth fund? Like, you could still have both, right? World reserve currency and sovereign wealth fund. Why not? Well, okay, I've kind of been lying this whole time. This is a picture of an old American president signing into law our largest sovereign wealth fund. We just call it by a different name: Social Security. It's only for old people, but it is a pool of money where the government tries, emphasis on tries, to preserve its value for our future use. And what does this 2.72 trillion dollar fund consist of? You guessed it, US Treasuries. We are basically doubling down on what makes us so powerful by funneling our taxes back into our government debt. We think this is a good idea because it's kind of another way of reinforcing our reserve status and making our risk-free assets that much more attractive. If instead we kind of had a sovereign wealth fund that invested in productive assets like stocks and infrastructure and ports, well, if it goes to there, it's not going to go to US Treasuries, right? It kind of upsets the supply and demand balance for our debt since we can so easily we run huge deficits. So a sovereign wealth fund would probably mean we'd have to issue more debt. So supply's up, and the marginal buyer of our debt has to come from somewhere else because if we use something like Social Security to buy into a sovereign wealth fund, we won't be buying treasuries. So supply up and demand down, I mean, you know what that means. We're going to have to pay more for our debt. It's the cost is going to go up. So not to mention if other countries see us, say, debating whether to divest from Chinese stocks during a trade war, the perception of the US as a trusted, market led, kind of politically neutral financial market could kind of scare buyers away from our ecosystem. And this all gives the well-oiled machine a little more friction, which makes our reserve currency status look a little less attractive, which can then turn that self-reinforcing spiral against us. So then, yeah, like I said, we'd just be a country with a lot of debt and a lot of problems. So basically, us being the reserve currency gives us an advantage in debt fueled spending, not investment fueled spending. Okay, I know that was an insane amount of information, so let's take a step back. All of the concerns I laid out are real: political dysfunction, short termism, ideological baggage, the fear of moral hazard, and the delicate balance that makes the US dollar the king of global finance. These aren't small details. They're pillars of the system that we live in. But here's the thing. Risks can be mitigated with the right design, and the upside of a sovereign wealth fund is hard to ignore. First, governance. The fear of politicians turning a fund into a political slush pile is completely valid, but it's not inevitable. Countries like Norway have solved this by creating independent boards with ironclad rules that on what can and cannot be done, and requiring full transparency, public transparency of every single holding. Alaska's permanent fund has been around for decades without turning into a political piggy bank. So if they can navigate US politics to do it with oil money, so can we. Second, incentives. Incentives. You can structure a fund so that it doesn't pay out a large universal dividend to try and get rid of this problem of a lazy state, and at least not immediately avoiding this laziness problem. Instead, it can be tied to long-term fiscal health. For example, using it to stabilize the budget during recessions or offset future tax hikes rather than sending everyone a check. That way, it strengthens resilience instead of eroding work ethic. Finally, the dollar issue. It's true that the US benefits enormously from being the world reserve currency, and that depends on deep treasury markets. But creating a sovereign wealth fund doesn't have to destroy that. A phased in, modest fund that grows during actual surpluses or AI revenues, which is rare but possible in the future, um, it it wouldn't disrupt global demand for treasuries. The key is size and pace. And frankly, the bigger risk to our reserve status is uncontrolled debt growth, which a sovereign wealth fund could help offset in the long run by creating assets to balance our liabilities. So, yes, the US is unique, and no, we can't just copy and paste Norway or China or Singapore. But a well designed fund is not a communist plot or an existential threat to the US dollar. It's a tool, a capitalist tool that could ensure future generations a buffer instead of a mountain of IOUs. After all, the richest country in the world, if the richest country in the world can't save even a little during the good years, then how long are we going to be on top? That's it. That's all I got.
What a way to end it. I like the mic drop. So I do have a couple follow up questions. If we go back to kind of the beginning, and when we talk about kind of what is the sovereign wealth fund, so if the U.S. was going to, let's say, just start one from scratch, let's say they had some money left over from a budget surplus and wanted to start this fund, what would they put this in? Would they just go start, putting it in Nvidia? Would they, you know, I don't know, put it in ETFs or like obviously what I would do as an individual and investing as an individual would probably be different than the government. So what would they go put this in exactly?
That's tough. I mean, I think you have to create a very locked in goal of what you want this fund to accomplish. So it is kind of interesting to think that if we just use our money to buy more American assets, that might just have a problem of overinflating the stock market and making everything even more expensive than it already is. So, one thing that Norway does is it avoids their home economy a lot and uses it to invest in other countries and internationally so that it kind of protects itself from doubling down on itself. So it if the Norway economy itself does bad, then they have a bunch of shares in Microsoft or Nvidia and all of these global companies that can help kind of support it if their economy isn't doing well. But it's hard to
So this
say.
kind of
No, go
so this
ahead.
is what you're saying. Like one of the goals is to use as a buffer in recession. So if a recession happens and like Norway assets plummet, then their fund isn't relying on Norwegian assets to then prop up the economy. So
Yeah,
yeah, I
exactly.
guess back to exactly what you're saying.
Yeah, because if
Um,
I'm Norway and I want to diversify out of Norway oil and gas because that's probably a huge part of their economy, I don't necessarily want to only invest in Norway because so much of the ecosystem depends on that natural resource. So like one of the goals is to kind of diversify completely away from oil and gas. So that could be like you said, stocks, bonds, real estate, private equity, kind of anything that could preserve its value in a diversified way that it kind of the up times in one asset class could buffer and help kind of smooth out and stabilize the fund on a down valuation in a different asset class.
gotcha. And now I want to do a kind of 180, and I hesitate to bring this up because this could also be a big topic, another video's worth. But sovereign wealth fund sounds similar to, at least from my knowledge, endowment from like a college or university where they have a pool of money that they're investing and then they're taking money from. Um, how is it different? Is it different? That's just the first thing that came to mind
No,
when you started
honestly,
talking about.
you're completely right. I'm pretty confident to say that an endowment fund is basically a sovereign wealth fund, but the goal is different. So the goal is just to preserve and grow the capital for the benefit of that specific university. But if this was a sovereign wealth fund for a country, it would just be countrywide instead. But no, you're completely right. It's the goal is to preserve this money for future generations. And I mean, if you look at some of the recent news, like I think Princeton just announced that they were going to have free tuition for everybody that makes every family that makes under $250,000 a year, which is like awesome. But they only were able to do that because they saved money over this time to be able to like afford and spend it in a smart way in the future. But if they were like Venezuela and just spent all their money on making really nice dorms, then they would definitely not be able to do this. So it's kind of like just be smart with your money. Sometimes it's just that simple.
Easier said than done. And then kind of using the endowment as like an analogy, um, a downturn in the economy and what a lot of universities saw, like a decrease in enrollment and whatnot, happened during COVID. And so when COVID happened and students were sent home and there was less revenue for universities, the one thing that I found really surprising was that universities didn't take from their endowments and use it to support faculty or salary, and instead laid people off. So that kind of makes me hesitant in some way. Where if the country has a sovereign wealth fund and they're supposed to be using that fund to as a safeguard against, you know, people losing their jobs or whatever it may be, or losing income sources, I feel like COVID-19 and in universities was um, one thing that would lead me to be skeptical about this, because universities didn't use their endowment to help their employees, and instead just kept firing them like a normal recession would happen. Um, I guess what would you say to that?
I mean, I think you're completely right. Like, there's no requirement to spend this money. Like, how, to be fair, how are you supposed to know if this is when the times are bad where you have to spend it? But I think the problem is that there was no forced spending. So I think a sovereign wealth fund could be created in a way that's almost counter cyclical, where if, I don't know, let's say the GDP says that we're in a recession, then it has to, I don't know, withdraw a little bit more of its funds so that it doesn't have to be a decision by the board, who probably would just rather fire people to make it would be less risky for them to just fire people instead of spending this fund, because then the fund could disappear, right? So you almost have to have these ironclad, completely like forced rules so that it can function in a way that is best for those bad times.
That's a good point, because I feel like this goes back to what you're saying, and why Norway has been so successful is that they're able to set up safeguards prospectively and think, oh, hey, like, this is when we're going to take things out, this is what we're going to use it for, and we're going to be very transparent so that um, it does act in a way at which it was intended to be. Um, and I think that's a lesson that a lot of places could probably use if they're trying to implement some sort of similar policy.
Yeah, definitely. Um, it's kind of like I said earlier. It's sovereign wealth fund is kind of just it's a reflection of the the strength of the institutions of whoever makes it. Like, it is what you make of it. So you almost have to prepare for any of these contingencies so that it's actually is useful when it needs to be useful. So I
Yeah, and
mean,
I feel like it's kind of combining what's great about the revenue generating of a capital market, where we're investing money in companies that innovate and um, that build up people's lives and infrastructure, while still being able to use that money in a responsible way to benefit everybody. So I think this is a really interesting take and video, and glad you got to talk about it.
yeah, that was a great way to end it off. Another mic drop.